on May 14, 2019. Here's a snapshot of the positions held by the institutions as of that date. And so we begin by taking a look at gold, and we can see a big increase in long positions from 185,000 to 226,000. And we can also see a big reduction in shorts from 110 to 101. Now, I told you, when price reacted to this ascending trend line, anything can happen. We can get a push up or we can get that drop. But the fact that it hit that's a big area, okay? So we can see that it's during this consolidation candle here that they added all these longs, which caused price to move up. And if you look at the daily chart, you'll see that there was indeed a move up. So this shift in positions makes net positions go from 75 to the positive, on the positive side, to a positive 124,000, which is a massive jump. Okay, this is a massive jump. So we can see that we got that move up, and then we've since had the push downwards. So where does this go from here? Well, you know, we still have the weekly bearish engulf, and as far as I'm concerned, this is still going to drop down like this. Now, it doesn't look so great because of this data, but you have to remember the context of where this the shift in positions is coming from. So everything stands as it has been. Now we take a look at oil, and we can see long positions being closed from 616,000 to 607,000, and a slight decline in shorts as well. Bottom line is long exposure still sits at 83%, and a slight decline in net positions. Okay, and that comes as this candle was consolidating right here. Now we go to the dollar. This candle of consolidation right here, and what do we see with their positions? They close longs from 46,000 to 40,000, and they also close a massive amount of their short positions. Now, what does this do? Well, remember, total size positions were aggressive, so I told you they'd have to close off some positions, and this is exactly what they've done. They've closed longs and they've closed shorts, but the result is long exposure goes up 3 points to 75%, but net positions slightly decline. So they have more of their portfolio geared to the long side, but overall positions have declined because of the profit taking on both positions. Still expecting move higher up on the charts here. Now we have the Aussie US dollar, and what do we see? Longs being closed out and shorts increasing. Now, haven't we been expecting this move for quite some time now? And then you can see on the charts that's indeed what we got. So this data represents this candle here, and the increase in shorts is what ends up bringing that. Expecting even further move to the downside to come. Now we have the US CAD, and we can see that a slight decline in long positions, slight decline in short positions, and the result is long exposure goes up 1 point. So this is very high. Okay, this is very high, and I would expect them to have to take off more of their long positions in order to get this to come up here, because they're already overextended. I mean, they can add more, okay, they can, but you know, this is really high up there, and it's just going to be a little bit difficult to continue price to the upside with these numbers like that. So we'll wait and see what takes place. And we have the US Swiss franc. Now, I've been saying that, you know, this is too overly aggressive, 86%. Okay, you can see that they're very aggressive to the long side with the coloration of the cells. Net positions are higher. So what have they done? What have they done? They've taken some profits on their longs, reducing them from 51 to 47,000, which is great, but they've also reduced their shorts. Okay, total size dropping, which is good. And this came as this candle was being produced, and of course we see that price eventually did retrace downwards a little bit further. And now we have the euro. Longs close off from 152,000 to 150. Shorts also declined from 258 to 245. Longs go up 1 point, and net positions slightly declined from 106,000 to negative 95,000, and that came as price was rallying up towards that descending trend line. So still waiting on this one, expecting that to take place on the chart. Now we have the pound US dollar. This one's been a very difficult chart to read just because of the dynamics of the time frames. But this big push down, and longs increase and shorts increase slightly. So much so that long exposure actually goes up 2 points, and net positions decline from negative 6,000 to negative 3,000. So again, I'm not trading this one. Very messy charts. The data is not showing us anything solid, so not making any moves on this one. US dollar, Japanese yen. This data comes as price was consolidating right here at the weekly area of demand. And what do we see? Big decline in longs. We were expecting some profit taking, right? We were very aggressive with the longs at 85% exposure and slightly aggressive. So what do? They take profits on longs, causing price to head lower, and an increase in shorts as price was dropping as well. So this one's also a tricky chart. It can go in any direction, but there's a slight bias to more downside. Okay. Now we go to the Kiwi, and we can see that price was consolidating here at the weekly area of demand. Price eventually went lower, and longs increased, shorts slightly increased. The net result is long exposure goes up 2 points, and net position slightly decreasing, expecting price to continue to the downside. And that's your May 14, 2019 CFTC data. I hope you have a good one. Take care.